All right, good morning, everybody. How's everybody doing today? So welcome to FX Bootcamp. This is not a load service, no direct trade recommendations. What I will do is conduct some live fundamental technical analysis with some luck we could put together a profitable trade plan or two. Please bear in mind that trading massively leveraged, risky. Please not trade your hard-earned money until you have a track record of success using a broker's play account. Who caught my tweet today about the Aussie long? Tweet feed. Anyway, whatever. All right, guys. So today's webinar, I'm going to sort of do this as a yeah, cheers. It takes practice. Today's webinar I want to do in sort of a discussion format, and I'm looking for your feedback on this as much as anything else. So I'm going to sort of respond to your questions. What I want to talk about is this. It's going to take me about 15 minutes to say everything I want to say. And then then we'll just sort of talk about some stuff. And I'd like to approach the charts as if you haven't looked at them for the day and then break stuff down strategically and do your analysis that way. I'm all about routine in trading, because if something's working, you want to repeat it. If it's not working, you want to sort of jettison the stuff that's not working. But if you don't have any kind of regimented approach to it, then how do you know what's working? How do you know what's not? You know, the whole idea is to sort of be, reasonably professional with these things. All right, so fair enough. Okay, so my webinar is entitled How to Get Your Day Started Right. And what is the first thing that you guys will do to start your trading day? Yes, turn on the computer. Thank you. What comes second? You know what, JB? I was actually going to say that being a bit of a smart aleck, but you're right. Getting massively caffeinated is part of the objective. Okay. Right, so there's a couple of things of equal importance to me. One of them is certainly to check the calendar. Now, what are you looking to get from? I'll tell you what. And none of your responses are wrong, by the way. All things that I look for, and you actually all things that I look for, absolutely. Now, I'm going to tell you sort of the way that I look at stuff, and then maybe you can respond from that. Okay? So when you look at the calendar, what are you hoping to achieve from that specifically? Okay. Well, I also think lately that the news has had very little impact. You know what I mean? Does anybody care about industrial production for the UK? Really? Does anybody care about It's a red event. It's a massive news event. But does anybody care about industrial production for the UK? No. Nobody cares. Does anybody care about French consumer index? Nobody cares. Right? And a lot of it is, my analogy for the stuff is, look, if the soldier is missing an arm and a leg, and all of a sudden gets a scratch on his face, is the scratch on his face significant considering they're missing an arm and a leg? No. The world is hemorrhaging right now. And so retail sales, things like that, nobody cares, guys. All right? Things are going to continue in the motion. They're going to continue irrespective of whether the French are producing more fiat. Okay? I do agree with you, though. It is important that you don't trade directly around major news bulletins just for, something catastrophic could come out and you don't want to be exposed to it, I've got a 15 pip rule. If I'm not, I want a 15 pip window. So if I'm plus 10, I'll have a stop at minus 5. If I'm plus 15, I'll have a stop at break even. If I'm plus 5, I'll have a stop at minus 10. Okay, so I've got a 15 pip rule around major news announcements. And the reason why I use 15 pips is just because that gives me enough room that if something volatile comes out, I'm not going to get slipped or gapped or any other shenanigans which can happen. I typically won't enter. Lately I don't really care, but typically for the London session, I'll enter trades all the way up to about 15 minutes before news. Now, obviously, things like an NFP or something significant like that, or ISM in the States or something, I'm not gonna. You're right. Well, GDP is very lagging. I've never counted GDP as a very important piece of information for the currency market. I'm a technician too. If I see it, I'm gonna trade it. Frankly, that's just my 2 cents on it. Okay, so the calendar for one, I'm not a big news guy. The boot campers will tell you, JB's in the room here, I'll honestly look at the calendar and go, right, what's on today? Oh, pound news, nobody cares. French news, nobody cares. German news, nobody cares. Great, let's go trading. Right, I'm a little cavalier with it, but really, there's so much other macro stuff going on. Thank you, David. There's so much other macro stuff going on that I think it's less impactful than we give it credence for at the moment. I do expect things to return. I do expect things to return to more economic number specific, but not right now. Things are just way too crazy. Okay. Right. Okay. Now, what other things would you look at to begin your day? Right. So, yes, pivots, and we'll cover that. Yes, multiple time frames. Just think about some other stuff while you're attacking, before you sort of attack the charts. What else would you be looking for? Okay, sure. Whether it's a risk on, risk off day. Now that's a little bit reactive, because yesterday, when was it, the day before, everything was heading up and it looked like a risk on day. Meantime, we're hitting all sorts of resistance on stock market, and I was like, well, this is not going to be a risk off, and the Aussie fell. Yeah. Do I care about SA news and data? Not from a trading aspect. No, I don't trade the ZAR, Boyke. I do think I do watch it just because I'm from South Africa and I have an interest in it. But as far as a money-making proposition for myself, negative. Right. So relative strength, yes. Okay. What's moving? Absolutely. All right. Anything else? Ahmed, anything else of significance? I like to start a little trail of, yes, okay, the dollar index, very important. Okay, I like to start sort of a little trail of thought. Okay, so if I said to you something like this, and I appreciate all the responses, by the way, it makes my job much easier. Okay, if I said to you something like this, the S&P, the Standard and S'mores, that's the marshmallow with chocolate variety. If the Standard and S'mores was hitting sort of a daily trend line and a weekly R2 at the New York Open. Okay, what would you think could happen at such a situation? The S&P hitting a daily trend line at a weekly R2 at the New York Open. What do you think could potentially happen here on the S&P 500, the Standard and S'mores? probably going to at least bounce there, right, Pat? I mean, at least bounce. Maybe not reverse, but at least bounce. Yeah? Right, so what does that mean for us potentially? That the Aussie's probably got the potential here to see a little bit of red. What else? So potential for Aussie red, does that mean that the dollar's going to sell, that the dollar's going to get bought? Pound yen. Does it mean that the dollar is going to be bought? Maybe, maybe not. To be determined. Okay. Does it mean that the euro is going to go with the Aussie in sympathy? Oh, okay. Well, maybe the dollar index, maybe the DX is coming off an area of support simultaneously with the S&P hitting the resistance. Then you might go and look at, say, a euro Aussie chart, the cross, and see, wow, okay, you know what, this euro Aussie is also hitting a level of resistance. So we have got the DX at support, the euro Aussie hitting resistance. If the Aussie is going to drop, the euro is really going to drop because it's actually going to be relatively weak with respect to the Aussie, and we know that the Aussie is going to drop too. So wow, the euro is really going to be a downside instrument. How can we go and build a trade plan around that information? Okay, so what I'm trying to say is not necessarily following the sort of logic. I mean, it's always different every day, but I always try to find one thing that makes sense because you can deduce everything from that one thing. Can't you? I mean, if you had, let's say you had something like this going on, big sort of 4-hour trap on the euro pound, okay, and you walked in that day and you saw this going on. Let's say you had 2 days like that on a euro pound daily chart. Okay, and you had your 5 EMA here. Not everybody uses the 5, but let's say you had the 5 EMA like this, and price sort of opening up here somewhere. Tell me about what a reasonable level of expectation would be on that chart for that day. Absolutely, Holly. But I like to have a starting point where I can begin my logic. Okay? And I'll elaborate. We've got to push our time here. We've got half an hour. Right, so it would seem unreasonable that we would just disappear into the sunset here. So maybe it pops up a little bit first, but I would expect some red here. Thank you, Doc. Nice to see you, by the way. So I would expect some red there. Doesn't mean to say the trend is reversing, but some red there would be a reasonable expectation. What does it mean? This is a euro pound daily chart. So if I'm expecting red, I'm expecting a relatively weak euro and a relatively strong pound. Right, now what's the next level of information I need? What is potentially going to happen on the dollar? Okay, now let's say hypothetically you do your dollar analysis and you realize, you know what, this dollar is going to get strong today. Well, if the euro is going to get weak and the dollar is going to get strong, well, a euro-dollar short probably makes sense. And I'm not going to trade the pound to the downside because strong pound, strong dollar equals debauchery. Oh, okay, cool. Now let me go and look at some euro. Does that make sense? And you start to develop a bias because of one logical point of information. So for me, I looked at the euro today, and everything was looking bearish. And I said in class today, well, I'm bullish on the euro. Pegler, you mad? Euro's been bearish for days. Well, at the beginning of the week, we expected to go back to the weekly 5 up around 128.60 to today we log in and we're getting a daily higher low and a 4-hour stochastic cross to the upside, despite everything looking bearish. Okay, so one piece of information was the catalyst for deducing many pieces of information. All right, so I would encourage you to do that, and it's a little bit of an experienced hand, but I would encourage you to do that, is to say, right, what is my starting point, and what do I need to do to sort of move from that starting point? Does that make sense? Have I articulated that point clearly? And if I haven't, shout, because I think it's an important one. Okay? So, yes, calendar, or firstly, coffee, calendar, information. Can you remember CCI? Coffee, calendar, Intel. Yeah, not CCI, just CCI. And, okay, so after that, then I like to do my relative strength assessment. Now I've got something sort of subliminally in the back of my head as to what I'm looking for the day without really doing much of anything. Okay, then I'll do, and this is just my step, right? I've got a screen that looks like this. And I've got 5 charts here. Right, now I've talked about this before in previous webinars. What do you mean, Boyke? Okay, now let's say, alright, this is a Euro chart, and these are 15 minutes, this is a pound. Of course you only trade what's on the chart. Absolutely. Yeah, every time I think for myself, I generally hurt myself. Guys, I don't use fundamentals. I couldn't care less if you told me that there were 401,000 jobs on versus 399. I don't give 2 continentals. Nobody cares. Just show me the money. That's it. Is this stuff up or is it down? If the chart says it wants to go up today, I don't get sentimental. If the euro wanted to go to 170 right now, I don't care. People get sentimental about it. That's the thing. It's psychological. Oh, I'm so married to the fact that the euro is collapsing. I don't care. If the daily trend changed to the upside, all the news would suddenly become bullish for the euro. Absolutely. But it's all related, Boyke. If the S&P is going to head down, we're coming off a daily trend line for the S&P today. The Aussie's making lower highs, lower lows. Off 104 psych level, basically. Right. But the intermarket is what's on the charts. If you can use the correlation from other instruments to help you trade what's in front of you, you need to do that. You don't need to have the dollar index to trade the euro. But let's say the euro technical picture isn't clear, yet the dollar index technical picture is clear. Then you can apply DX technicals to the euro technicals to deduce a euro trade plan. You're not thinking outside the box, you're just simply looking for other clues when things may not be clear. Absolutely. So yeah, I'm not one to, I'm a price follower. I'm not one to sort of try and preempt where things are going. Well, yes. But, right. And a lot of times if it's not clear, I'll set myself parameters for what's going to clear it up for me. I think that's important, is that you need to know when it's going to become clear for yourself. Anyway, let me finish up this point and we'll move on from there, because I do want to cover a chart and at least work out some stuff. I haven't got to the meat of my presentation yet. Alright, so Euro, Pound, Aussie, Yen, and USD Swiss. Okay, what I'll do is I'll watch the last sort of 3-4 hours of price action, and if the Euro's doing this, the Pound's doing that, Aussie's doing this, Yen is doing that, Swissie's doing that. Relative strength-wise, Euro's stronger than the Pound, Aussie's as strong as the Euro. You know, if I'm doing a relative strength sort of thing, I'd say the US dollar, Euro, Pound, Aussie, Yen, and Swissie, doing values out of 10 here, 10 being the strongest, 1 being the weakest. Where would I rate the dollar here? Probably a 3, the Euro an 8, the Pound is a 4, the Aussie is an 8, the Yen is a 3, and the Swissie is a 7. What do I want to trade? I want to trade Euro dollar, I want to trade Euro Yen, the stuff with the biggest relative strength differential. Then it becomes a matter of figuring out, is that relative strength sustainable or not? Well, you can look at your crosses to determine that. Okay, so relative strength is reactive, but you need to be proactive about it to work out the sustainability of that move. Alright, so that's relative strength. I don't put a tremendous amount of credence into it because I just think it's very reactive. Very reactive. Okay, now, the next thing I like to do, right, once I've figured out what pair I'd like to start with, given all that information we just discussed, now I have a little procedure for myself. Okay, I'm a fractal geometry support and resistance guy. Okay, that's my thing. And fractal geometry is really a highfalutin term for a very simple concept, and I'm simply using the longer term charts for my direction, and then using the shorter term charts as a shorter term building block for confirmation of what I'm deducing on the longer term stuff, right? So by definition, somebody said to me a fractal, if somebody showed you a picture, a whole sort of painting you can stick on a wall, and then somebody showed you a single pixel of that painting, you'd be able to see all the detail in that single pixel as to what you'd see in the entire painting. Alright? Okay. So, what I like to do then is go, and I'll start with a 15-minute chart. Okay, and I've got a little sequence for myself. Let's start with a little 15-minute chart. Then what I'll do on this is I'm asking myself, what is the 15-minute direction? Alright, and I'm applying this, remember our previous webinars about time of day. Okay, so I consider Asia into pre-London as one batch of money flow. In other words, typically speaking, 60-70% of the time, I want to be trading Asia and pre-London in the same prevailing direction. Okay, and I want to be trading the London session into sort of London lunch as one batch of money. I typically don't like to challenge the direction of that session. Okay, and then sort of London lunch into the New York Open as one session of money, and then New York stock market open into sort of the London close as one more batch of money. That's very important to me. Okay, so if Aussie's heading up Asia pre-London, providing it has enough resistance, I'm not going to try and challenge the direction of that. If London says down and we haven't hit support, I'm doing nothing but looking for reasons to short. Alright, now, so this is my little sequence. I'll go, and I'm breezing over these guys. You realize that this discussion here could take us 45 minutes. Okay, and this discussion about 15-minute chart direction is a 45-minute presentation. Alright, so what I'll do here is look for 15-minute direction. Okay, then, and I'm not looking to pick up specifics. I'm not building a trade plan. I'm just gathering direction here. In other words, is this thing going up or is it going down over the last few hours? Alright, and you can do that however. I use price action and EMAs. I mean, you can just visually look at it and say, that's up, that's down. Alright, then I'll go to the 4-hour chart and I'll do the same. I'll say, what is the direction of this 4-hour chart? Okay, in other words, is this up from a price actionary standpoint, or is it down? All right. Once again, not looking to build a trade plan. I'm just gathering information. Okay, and it takes me about 15 to 20 minutes to analyze a single currency pair properly. I'll probably do it quicker, probably do it in 5 minutes, but to build a trade plan that I feel comfortable with, I feel like I've covered all my bases, I've done all the research, I've looked over every eventuality, I've worked out my risk reward, I've worked out my major turning points, I've got everything in alignment. 15, 20 minutes. Yes, I absolutely care. Absolutely care, yes. But there's a time and a place for it too. I mean, if that's what's called for that day, I'm happy to do it. It's a different type of trading. It's a quick in and out sort of trading. It's not a fire and forget. So it's different money management. It's different accuracy. It might even be a different sort of a different lot size as I allow for more nimble kind of trading. It's just different trading. But yeah, I'm okay with it. All right. So I'm looking for direction. Then I'll go to a daily chart. All right. And now I also look for the prevailing direction on the daily chart. Daily. Okay. Now I've been 15-minute, 4-hour, daily. Now I'm looking at daily direction. Now the other thing I say to myself here is, what color is the next candle? What color is the next candle likely to be on this daily chart? And on a Monday I'll look at the weekly too and try and work out in generic terms where we're going for that week. What color is the candle going to be on this daily? How many of you actually do that? You go to your daily chart and you say, look, what's likely to be the color of the next candle here? Well, I do some personal mentoring, right? And this is something that I insist that everybody does, is a lot of people have, and everybody's got different resources in terms of monitor real estate and stuff, but a lot of people look at a daily chart and then put it on the shelf for the day. To me, the daily chart should be your most watched chart. And I'm not just talking look at it and put it away. I'm talking have it in your face. Have it up at all times. Be watching it all day. Because the color of that daily candle determines the direction for that trade plan, you understand? So if you're expecting a red candle, that's going to give you, in generic basic terms, the direction of where you want to trade stuff for that day. In other words, it's going to create a bias for you, a trading bias. If you don't enter in the, I'm a firm believer in biases, massively important. Okay? All right, now I start to look, after I've determined what I think the next direction is going to be, I start to think about my levels on this daily chart. In other words, where are major levels of support and resistance? You can do this through whatever technical method you want. I use confluence, I use support and resistance, I use pivots, I use fibs, the whole gambit. Because I got different sort of ideas for it, Boyke. Meaning that I'm just trying to get a feel here initially for which way this could potentially go. I'm not necessarily trying to build a trade plan yet. And like I said, this is just what I've settled on as a person. I'm not saying it's the best way to do it. I'm not saying it's the worst way to do it. It's just my idea. Right? And, there's analysts and then there's traders. You've got to be a good analyst to be a good trader. And this is just analytically what's worked for me. So, then I'll look at my different levels. Where am I significant levels of support and resistance. Alright, then I'll actually go, now I'm trying to get a little more specific about where I'm expecting major turning points on the market. Okay, because I tend to only want to trade off turning points, not in between. Alright, then I'll go from this daily chart and I'll actually go back to a 4-hour. Okay, and what am I doing on the 4-hour chart? I'm now getting more specific. I'm taking this direction I talked about, this direction I try to determine, then I'll go to the 4-hour chart and say, right, what levels are important on the 4-hour? In other words, right, so we're coming down here, going to head up to 70, so I think we're going to roll over, and then where's the next major level of support? It's probably here at 5,300, and then if we can get below that, the next level I have here is at 5250. Right, so I've got a major sell zone here. I've got a shorter term buy zone there. If we can get through that, the next major level of support is down here. Okay, I have determined sort of major turning points. So if price is here, you can say, right, where I'd expect to find sellers. I'd expect to find sellers there. I'd expect to find buyers here, and I'd expect to find more sort of buyers down here. That's meant to be a red, a green down here. Okay, so directionally it's down. Where's my major resistance turning point? Great, it's up here at 70. The buy zone, which I know is a zone where I don't want to be selling, but because I'm bearish, I'm not going to buy it there. Right, I'll let it react off there, take the lower high, push it down, etc. It is, Ray, but I still think that there's very good clues to be had on these daily charts. Very good. Do you guys remember an NFP on Friday? I kept saying the pound is going to fall big time next week. I think I said it like 4 times. Tell me somebody remembers that. Yeah, why is that the case? Because the daily had given us every clue train that was about to happen. Yeah, and you just had, massive sort of price actionary clues that it was time. And I'll elaborate on that in a minute. But yes, Ray, you're absolutely right. I'm certainly not dismissing what you're saying. You're 100% correct that when you are a little bit directionless on the longer terms, absolutely you've got to lean on, yes, Robert, I do, significantly lower. I think this is a break. You're absolutely right. When you don't have as much daily direction, yes, leaning on the shorter term stuff is all you have. But I still think you've got to do your due diligence on these dailies in 4 hours. Okay? So once I've worked out my 4-hour levels, now I go to the hourly chart. And I do the same sort of thing, which the hourly is really just sort of looking for a little bit of congruence here. Okay, then I'll go to the 15-minute chart, and I'll look at my levels here too, but I'm now getting very specific about how I want this to go. Okay, exactly where I want it to bounce, how it's going to look, how I'm going to execute, what is this going to, if this, then that, and I'm trying to plan ahead of it. I actually don't think so, no, I disagree with that. This looks like a pretty good break of support. I actually have it coming down to 51 minimum and then option to go lower off that. My 2 pips. Okay, so we've got 8 minutes. We've got 8 minutes to do what I'm talking about. You ready? And I'll do this sort of thing, by the way. I'll ask the people in class, I'll do this sort of thing. Okay, we're going to buy here, and then we'll see some red there, and then I'll come back to our support point, and then we'll buy it up to the target. Stuff's done hours in advance. Okay, so let's pick a pair. I don't care. Something that's moving. What do you want to look at? Yeah, I mean, I think this daily trend line here. Is. Okay, give me a sec. We can look at Kiwi. Kiwi's coming up against some resistance. It's actually almost too simple right now, FX. We can look at New Zealand if you want. You guys want to look at Aussie? We can look at Aussie, but Aussie's a bit of a quagmire right now, though. I like the Aussie, but I've been leaning on the shorter term stuff a lot. I see no reason why we don't at least tag this trend line here, Rob. And then I could see us sort of hitting this trend line, bouncing up again, dead cat, and then really pushing quite significantly lower. Well, I like easy too. All right, I tell you what. What about, right, great, Aussie it is. I like me some Aussie. Fine. I'd prefer to do the Euro because I think it's a clearer picture. You know what? I'm going to veto this. Sorry, guys. But let's do Euro. Okay? Maud, if I run over Buttock 5, is that going to be a buzzkill to the operation? Okay. I just didn't know if there was somebody behind me or what we're doing. Right, let's do this thing quickly and in a hurry. Okay, so we're going to pretend that we are starting our analysis at around 6 a.m. or 5 a.m. London time. We're going to pretend. Okay? And here's your 15-minute chart for the euro dollar. What could you tell me about this? I'm going to put the speed analysis on this. So well, yeah, it's sort of, remember all we're trying to look for here in this initial sort of look at it is it's been up, hasn't it? We remember we're pretending like we're starting our day. So we're going to call this Asia. We're going to call this rise Asia. Okay? And Asia has taken us up here, make believe with me. Alright? And it's been up. Okay? We've gone roughly about 130 pips to the upside. Average daily range of the euro is probably right around that. Okay, on a 15-minute, so generically speaking, it's to the upside. In relation to other pairs, has it been strong, weak, in between, medium? It's been pretty strong in relation to other pairs. Okay, so is it our best instrument if we're going to look for shorts? Maybe not necessarily. We'd probably have to look at the euro pound, see if that's hitting any level of resistance, to see if that relative strength's going to switch. Okay, but it's pretty exposed in terms of its upside potential. All right. Now, for argument's sake, let's assume that euro pound's hitting a level of resistance, and euro pound's going to come down pretty heavily. So we'll make the assumption that we're going to see some relative strength switch out of this. Okay, you wouldn't do that typically, but for the benefit of this conversation, we're going to do that. Okay, so now what I like to do, just in relation to what we talked about, I like to go and look at the 4-hour chart. Okay, directionally. Anything significant on this 4-hour chart? Well, for the most part, we're in this downtrend, not the smoothest of downtrend. We're in this little downtrend, little wick higher high, little double bottom action, and this today was the big clue train, is that little higher low right there. So we've got a little double bottom, but essentially we're still in, a fundamentally downside direction. I say fundamentally, what I mean by is sort of generally speaking, we are still to the downside. All right? Okay, cool. Remember, we're not necessarily looking at levels now. We're just looking at the prevailing direction. Now, on the shorter term basis, you got a little bit of a change there. You get a little higher low, higher high. So duly noted, but overall to the downside. Have we designed the trade plan yet? No. No, we're just getting to know our charts. We're just getting familiar. Okay? It's kind of like when you're 18 and you just walk into the nightclub and you're like, well, who's here tonight, Am I the big man on campus? Right? You're kind of just getting a feel for it. All right? Then you go to your daily chart and you start to get a little more serious. All right? Now, on this daily, what is the downside direction here? Absolutely to the short side. Making lower lows and lower highs. 21 EMA is sharply pointed to the downside. And you've got this little higher low here, which is interesting. Okay? Nothing's really closed above there, but certainly a little higher low there. Okay. All right. Once again, duly noted. Now we've kind of got our directional sort of input in place. All right. Now we need to start thinking about significant levels. In other words, levels that are potentially going to see us rolling over. And guys, I'm out of time, so let me get... Is there somebody after me? Okay, 5 minutes, and I'm going to blow through this. It's a pity because I actually got quite a lot to say. All right. So, where would be a significant turning point here? Thank you, David. Well, we can do this a few ways. However you determine that's on you. But, we have two major levels of significance here. We've got this sort of 50% here, previous swing low level. And then we also got this double top zone up here around 130. So on a daily basis, I'll be quick, I promise. Good morning. Afternoon, I should say. So on this daily chart, we've got a major sort of turning point here, and then obviously we've got this little green zone here down at the bottom, etc. Alright? So are we closer on this chart basis? Are we closer to support or resistance? We're closer to resistance, aren't we? So now we go back to our 4-hour, and I'm going quickly and I'm skipping a lot of good details, but it is what it is. Now we go to our 4-hour, okay, and we've got to work out some stuff. Alright? This is that same, and I'm using red zones here to determine sort of buy and sell points. But would you agree that this looks like a... Well, no. I'm not trying to skimp you. I'm doing this just because I'm running out of time. All right. Would you agree that this looks like a significant area of resistance? Previous swing lows. You got the psych level right above there. So some junk in here, some hesitation. This is a fib of the drop, blah, 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 blah. And if you take this trend line down, you know, you've probably got some goodies there too. All right? So, yes, we'll call that zone there an important area of resistance. Yeah, Dave, you're fine. Would I wait for a break of 2860 to do what, Len? To buy it? No. Okay. So, right. Okay, so that would be our major area, a major resistance point. Okay, so we'll now on the bullish side, where would our buy zone be? Just sort of, our buy zone would be, we've got little lows there, we've got a fib of this rise, so our buy zone would be basically here. Would you agree with that? Meaningfully speaking, our buy zone would be there, and our sell zone would be here. David, that's a massive gap in there. That's like over 100 and change pips. Yes. Yes, it is. Okay. So, resistance, sellers, buyers. We established that we're in a short-term little bit of upside, but overall, looking for the short side. So, we could potentially look for a spot trade to take it to there, and then at least sort of a meaningful trade to take it to the lows again. Okay, so now we've all of a sudden generated some trade plans without even knowing it. We now know that we're looking for buys here and sells there. Now what we can do is sort of try to relate this back to something more specific. The mechanics of how we're going to situate ourselves. Okay, well, we haven't even looked at the equities. You're coming up major resistance there. But here we are, pivots chart. Oh, lo and behold, we've got a weekly central pivot up here. That's how we generate our target today. And we've also got daily reversal pivots in the same zone. Well, remember us playing make pretend? So now we are effectively opening London, or potentially going to be opening London, at a weekly central pivot, a 50% fib of the drop, daily R2, building a case for maybe there's some downside here. Well, where did we say our next bar point was? Our next significant bar point was this, wasn't it? Was our trend line and our fib of the drop. So our next significant bar point was this 2750 zone. So that would be our green zone. Okay. Now where's our red zone? I'm going quick, guys. I'll be off here in a sec. Where's our red zone? Okay. Okay. Now how are we going to work out how we're going to actually physically trade that? Does that mean that we have a trade plan? No. No, we just have our major levels in mind. Okay? We just have our major levels in mind. Now we need to work out the mechanics of how we're going to do this. So we have medium-term price levels, and then we need to work out our shorter-term price levels to help mitigate our risk and get ourselves accurate. Okay? On the short term, where are buy and sell zones? On the short term, we're going to have this as a buy zone because of here. So there's our green here. And we established that our red is going to be potentially at a lower high, if not up here. Great. So now because we're bearish, because we're opening at resistance at market open, we're now looking only at red zones but don't want to sell in green zones. You guys are going to have to watch this back to get everything I'm saying. But, right, so we're either going to look for a lower high here with some short-term confirmation, or if we break that, we're going to look for the next level. Where are we targeting? We're targeting down here. That doesn't mean to say you're not going to find support here. It just means that you're not looking to sell there. Okay, so we got two opportunities here. One is a short around to the 28.10, and the other one is a short somewhere in the vicinity of 28.5 to 28.60. And then you'd revert to your shorter term charts to facilitate those trades. And that's it. Okay, that's it. Well, the long today was right here, guys. And honestly, Ray Charles could have seen that. Central pivot, trend line, higher low short term, up for the day, 4 hour higher low. Ready? Yep. Alright, guys. Good luck further. Hope you enjoyed this. I know it was a little bit rushed, as it always seems to be. But thank you, Epic Street, for hosting me, and I hope to see you at Epic's Bootcamp, guys. Okay, please join my Twitter feed at Forex David. I actually do update some stuff and throw out some trades every day. Okay, so good luck further. Talk to you next time. Thanks, everybody.